Hey guys, welcome to the Max Invest YouTube channel. In today's video, we're going to be going over proof of reserves with Chainlink, and then we're going to be going over how Arbitrum relates with Chainlink and what you can do on Arbitrum right now if you'd like to use Arbitrum. Of course, if you enjoyed the video, remember to like and subscribe to the channel, and remember, nothing in this video is financial advice. So let's get into the first part of the video. Now, if you follow Chainlink's Twitter channel, you'll see that they're doing a lot of updates about how proof of reserves is being used on Chainlink. Essentially, proof of reserves is making tons and tons of new integrations every single day, and it seems a lot of decentralized applications and a lot of centralized applications are using Chainlink's proof of reserves. Chainlink provides a suite of services to decentralized finance and centralized finance applications. Chainlink provides applications with data from the real world, it provides applications with verifiable randomness, it provides them with keepers, and proof of reserves is just one of these services that Chainlink can provide. Essentially, what proof of reserves is designed to do is it's designed to make the decentralized finance ecosystem more transparent. It's designed to make it so that everybody can see the true collateralization of assets in the decentralized finance ecosystem. Of course, we don't want assets to be under-collateralized, and Chainlink's proof of reserves will make that all assets are properly collateralized or over-collateralized, so it adds a lot more transparency into the ecosystem. Essentially what it does is Chainlink on-chain reference feeds can provide smart contracts with the data needed to calculate the true collateralization of any on-chain asset backed by off-chain reserves. So Chainlink can essentially calculate the collateralization of any asset in the decentralized finance ecosystem. Now, this is very important for a range of DeFi applications, such as, say, Aave, where Aave do need to calculate the collateral of assets on a constant basis, as they are a DeFi lending and borrowing platform. So, proof of reserves is definitely very important, and all it does is it means there's a lot more transparency in DeFi. You can see how well collateralized an asset is, and you can see the amount of reserves that they have on-chain and off-chain, which is very good to see. This is also quite useful for, say, stable coins like USDT or USDC, where with Chainlink proof of reserves, you can see what's actually backing that USDT and USDC. You can see on-chain if there actually are real-world dollars backing the USDT or USDC that is being printed, and this will make the space a lot more transparent overall. So it is good to see a lot of new applications using Chainlink proof of reserves, and I do think this is fundamental for all DeFi applications, and all applications should use this for a more transparent future. Now, the next bit of news that I want to discuss is I do want to discuss a little bit on Arbitrum. Essentially, it seems like Arbitrum is going fine right now. Chainlink price feed updates on Arbitrum 1 cost about 1/10 of the gas fees compared to Chainlink price feeds on the Ethereum mainnet. So this essentially means that Arbitrum is already doing what it is planned. We know that Arbitrum is an Ethereum layer 2 scaling solution, and it's meant to cost a lot less to use Arbitrum. So far, it is costing a lot less to use Arbitrum, and it is looking like it is doing the right thing, which is always good to see. I also do want to briefly talk about a little bit of a debate that's been going on right now. Some people have been saying that Chainlink is actually not related to Arbitrum that much. However, others have been saying that Chainlink is heavily correlated with Arbitrum. Now, this debate is actually quite difficult to answer, as it depends on a lot of on-chain statistics that will come out into the future. However, I recently did do a video on how Chainlink does relate to Arbitrum, and I do believe everything in that video is quite true, and if Arbitrum goes well, it should be successful for Chainlink. However, I do want to point out that there is a little bit of a debate in this ecosystem right now, and if you have any insight into it, leave a comment down below, it would be much appreciated. So, as we already know, Arbitrum came out a couple of days ago. Arbitrum is an Ethereum layer 2 scaling solution designed to make everything a bit cheaper, and right now you can bridge over to Arbitrum. Essentially, there are a couple of things you can do on Arbitrum right now. Individuals can use a couple of applications on Arbitrum, such as SushiSwap and Uniswap. However, most applications still cannot be used on Arbitrum, such as Curve, Aave, and a few other applications. Now, the reason for this is because Arbitrum is very, very new. And since it's very new, there's just not that much liquidity on Arbitrum right now. People haven't put in too much money into Arbitrum just yet, and it's taking a little bit of time to get across to all of the applications on it. So, I would say that in the first couple of months of using Arbitrum, there won't be as much to do on it. There won't be that much liquidity on Arbitrum just yet, and you'll only be able to do a few little bits and pieces like trading on SushiSwap or trading on Uniswap, or providing liquidity on SushiSwap or Uniswap. However, I do believe that by the end of the year, Arbitrum will have essentially all of the decentralized applications on it from Ethereum, and by that time there should be a lot more to do on Arbitrum. So if you've been using Arbitrum, I'd say just be patient. A lot more liquidity and applications will come in the next couple of weeks, and it will be very interesting to see what happens there. Now, the next bit that I do want to talk about is Offchain Labs, which is the team behind Arbitrum, essentially just raised $120 million. Now, this $120 million was given to them by a lot of VC investors, Mark Cuban, and a few big investors. What this allows them to do is it allows them to scale up Arbitrum, put more money into it, and hire a lot more people for it, which is always a good thing. And this makes me quite bullish on the future of Arbitrum, and I do think it will be one of the leading Ethereum scaling solutions. Now, the last thing that I briefly want to talk about with Arbitrum is the transaction fees are about $1. Now, some of you may be thinking $1 is actually relatively high. Transaction fees on things like Polygon are sub-cent. Transaction fees on the Binance Smart Chain are about 1 or 2 cents, and $1 does seem a little bit high. However, the reason it's about $1 to $2 right now is essentially layer 2s are the opposite of Ethereum. On Ethereum, the way it works is if heaps of people are using the chain, the gas fees go up. However, on layer 2s, what happens is if heaps of people are using the layer 2s, the gas fees go down. Now, this is a little bit complicated. However, it's not an auction-based or bidding mechanism like Ethereum, and what it does is it essentially means if more people are using Arbitrum, this can still all be fitted into the same proof and posted on the Ethereum main chain, and this costs the same fee. Whether more people or less people are using Arbitrum, it costs the same fee. However, when more people are using Arbitrum, this fee is split between a greater number of people and the transaction costs are lower. It's relatively confusing and I don't 100% understand it just yet. However, just know that when more people come onto Arbitrum, the transaction fees will probably go down to 10 to 20 cents, which will be very low and very good for it. The last thing that I quickly want to discuss is crypto fees. Now, as we can see, Ethereum is generating $46.5 million worth of fees every single day. The next closest competitor is Uniswap, which is an application built on Ethereum, generating $4.3 million in fees. Now, the next actual closest competitor after Uniswap is the Binance Smart Chain. The Binance Smart Chain does about $3 million, and as we can see, Ethereum is doing about 12x the amount of fees as BSC, and Ethereum is really dominating in this space, which is what I love to see. I do expect Ethereum to continue this domination in the long term, and I really don't see too many things flipping Ethereum in the future at all. So, the next thing I also do want to discuss is, as we can see, Optimism is down the bottom of the fees, and Optimism is generating about $130,000 in daily fees. Now, we know Optimism is an Ethereum layer 2, just like Arbitrum. However, right now you can only use Optimism on Uniswap and Optimism on a few different niche things. There's not too much you can do with Optimism. However, I do believe Arbitrum will eventually come up and overtake Optimism. I can see Arbitrum getting to around the $500 to $1,000 to $1 million generated in fees every single day range by the beginning of next year, and I will be interested to see if that happens. I do think that a lot of people are going to be using Arbitrum by the end of next year, and it should get all the way up on the ladders, probably come up above Optimism, and hopefully come up above Bitcoin in its daily fees. I would find that pretty funny if that happened. Anyway, that brings us to the end of the video. We had a brief look at Chainlink Proof of Reserves, all things Arbitrum, and crypto fees. If you enjoy the video, remember to like and subscribe to the channel, and thanks for watching the video.